The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome back to the Option Block, your bi-weekly source for options, wit, and wisdom, punctuated by a few moments of extreme hilarity and sometimes some downright objectionable content as well. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network, and I am joined today on the old all-star panel by a number of returning regulars, starting off with the man from the federal holidays, a.k.a. Mr. FHM of the tween girl clothing fame, a.k.a. Mike Cavanaugh from Know Your Options Inc. /SCG. Mr. Cavanaugh, welcome back to the show, sir.
It is great to be back. It is great to once again get tagged to girls' teen clothing lines.
Is there anything else that you know out there?
I can't solidify a solid nickname, can I? I have to be a girls' clothing store now.
When in doubt, it's tween girls' clothing. That's just the go-to for this program going forward.
It's good to be back.
And might I say that bare midriff half tee there is looking quite spectacular on you, sir.
Thank you very much. I have a midriff fit for radio and podcast. There's no question about it.
Also joining us on the All-Star panel today, midriff bear as well, is one John Grigas from Options Express. Mr. G, welcome back to the program. How are things in OX land now that I believe Tim Navabi has returned from his global escapades, has he not?
No, he still has not. So I expect to see him wearing a beret, eating cheese and wine for lunch tomorrow afternoon. He's had about 10 days off in April, so he's hopefully coming back. But no, we should see him tomorrow. Newly married, sporting that wedding band. Looking forward to getting him back on the desk.
If he doesn't bring you guys all baguettes and some nice wine, then I think you might have to sit him down and chat with him.
Yeah, right.
I'll be expecting my baguette and beret in the mail, I believe.
Or something? I don't know. But no, yeah, we'll see him tomorrow.
All right, and last but certainly not least is a last-minute addition to the panel as he scrambles for his headset and to put down his lobster bib, one Andrew Giovinazzi of Option Pit fame. It was coming out.
Can you hear me? I'm just wondering if Skype works. Is it working?
Yeah, I hear you fine. You sound a little distant, but you sound all right. Sound better than Sebastian, who is not here at all.
I know. I actually have. It's funny because I'm on a spot and I'm on the 10th green at Ocean Edge Resort. So I'm watching people will go by and play golf and eat lobster at the same time.
Yes, of course. Impressive. That's what you do over there in southern New England.
Hold it. I think I see Sebastian.
Well, we'll see what he's writing here. But in the meantime, I think we shall dive right into the trading block.
The Trading Block.
All right, and welcome to the Trading Block. This is, of course, the portion of the old program where we break down what was trading, what was moving the old markets today. And we had a wee bit of a dichotomy going on in the broad market today, with the Dow up about 0.5%, the S&P unched, and the NASDAQ straight down to the downside, down nearly 1% today, or about 23 handles to close at 29.88. And as we all know, there is essentially one name in the NASDAQ these days. That is, of course, that old fruit company we love to talk about, good old Apple. And they actually sold off today, which is, I can count on one hand the number of times we said that over the past year. Sold off aggressively, I should say, down about 4% or 25 handles to close at about 580 even on the day. Considering we were talking about them pushing the 640 handle just last show or 2 shows ago, that's a substantial move for this name.
Probably the last show.
Yeah, it probably was the last show. You're right. And just impressive. I'm trying to think of the last time we talked about an aggressive Apple sell-off, and it has been quite a while. Granted, this thing has been looking a little top-heavy for quite a while now, and certainly there's a ample justification for some profit taking in this name today, if that is indeed what is going on out here, because it's difficult to say exactly what triggered this, or if a bunch of little snowflakes started just forming into the avalanche and everyone started piling in to take their money and run. I don't know, but it's interesting to see nonetheless. I mean, of course, the announcement of the Justice Department investigation last week didn't derail the stock. The stock was still up, I think, 1% on the day when it was announced, so it wasn't that. I think it's just the overwhelming sentiment that maybe it's time to take some near-term money off the table here in Apple. Mr. Kavanaugh is probably the one here with the most skin in the game in Apple land. What are you guys up to over at KYO?
Did you hear me screaming?
Yeah.
The screams.
The screams.
Our business, our livelihood. I mean, that's why you collar positions. You kind of have to have the thought that a stock could do whatever a stock could do at any given point. Fundamentally, I think there's cause to think that this could be a short-term bloop, and that Apple's still a $600 billion market cap company, and this is just a short-term blip. I think, if anything, this is a reminder that the stock has enough eyes on it that these kind of volatile blips are going to happen. And what kind of makes me, I'm not going to use the word concerned, but kind of has me peaked is I think people are using Apple as an investment class. It's its own asset class. And that's kind of scary from the aspect of it's a company that should be looked at like any other company. But I'm starting to get a feel that this thing is its own index. It's the Apple index.
It very much is.
A random thought, but there's too many eyes on this stock that could move it in either direction that says – this isn't normal stock behavior.
I think it was
which is good and bad.
I think it was Mark Sebastian. Mark Sebastian, one of our recent shows, might have been Vol Views last week. I forget. But he was mentioning how he thought the top had come in Apple when he bumped into someone who said that all of their college savings for their children going forward and all of their retirement savings were all in Apple, because Apple can do nothing but go up. And that is kind of, I think, indicative of exactly what you're talking about there. That Apple has become, in the eyes of many people, this like I said, it's NASDAQ. NASDAQ is really Apple Plus at this point. It really is. All eyes are on Apple. Everyone's piling into this name. NASApple. We'll talk about
yes, and Apple. The Apple and P.
We'll talk about some of the options flow we saw in Apple later on, but it's just interesting to see that, yeah, right, this name. And I joked on the show before about my disdain for CNBC, and I tried to avoid it whenever possible. And today I had it on for about 5 minutes in the morning when I was having my morning coffee. And in that completely non-representative 5-minute sample that I took in this morning, literally within 30 seconds of me turning it on, was a big graphic on the screen. Is it time to sell Apple? Thoughts coming up soon kind of thing. And just the typical CNBC piling into both sides of the train nonsense that you have to love. But even in that, exactly, it was probably less than 5 minutes I had it on. Already Apple was dominating all of the news and the headlines. It is the elephant in the room. It is the gorilla in the room. It is the 800-pound gorilla alongside the VIX that everyone just can't stop talking about. Andrew, what were you guys watching out in Apple land today?
This is what I looked at today. I've got a slightly different viewpoint on all this. I look at Apple down 25. I look at Google down 18. I look at Priceline down $33. So I says to myself, what is going on in the world that would cause people to sell such fine momentum-loving stocks? So in my mind, I go back to those rotten Europeans. And my closet thesis is, the ECB has this big borrowing facility, everything's fine. The problem is, as I think what everybody's figuring out, is nobody but the ECB is buying Spanish debt at 6% plus. So what happens is ECB gives the banks the money, and the banks go, okay, we're going to borrow the money right from the ECB, buy Spanish debt, but we're not going to really spend any of our own money. We're just going to spend the ECB's money, and we'll pay them back, hopefully when this is all over. So I think that, right, and to me right now, I was as wildly bullish 3 weeks ago or 4 weeks ago as anybody. And I think the fundamentals are still great for a lot of these companies. All that kind of, good stuff, stocks going up, economy making money. But every time that these guys come back with these Euro shivers, it really puts like the 1%, 2%, 3%, swing on the market. And I think that's kind of what. And I think so basically somebody got caught, right? Maybe getting a little too aggressive. And the thing they got going right is Priceline. We got going Google. We got going Apple. And we're going to sell them and we're going to raise money fast. So I think some of these, because, you look at all these other stocks, they were just kind of plodded along. The Dow was actually, I think, up on the day, right? So, but places where a lot of big funds could be plowed in heavily, they sold them, I think, to raise some cash. So that's my closet theory. And I think that's until these Spanish guys maybe start to straighten this out. Like the story is starting small and it's kind of building every week. Isn't building into the craziness we had 3-4 months ago, or 5-6 months ago now. But it's still there. And I think anytime you see the big momentum stocks get sold, I think there's just other forces at work. That's my closet theory.
Yeah, Apple certainly is a holding in pretty much any large fund these days. So if they are looking to raise some capital and divest themselves of a few holdings, Apple's certainly going to take the lion's share of that hit. So that could certainly be one of the reasons behind this sudden downturn. Of course, speaking of selling, Mr. Grigas, were your phones on fire today with people panicking, stampeding for the exits, as it were, in the land of the fruit company? Or were the OX customers a bit more level-headed?
I almost wish I had more phone calls on Apple today, because for what we've seen over the last few months is a lot of our clients have been buying out of the money or at the money calls and doing quite well. And I think if you recall maybe everyone's early trading experiences, you made money a few weeks in a row, and then when you got stuck in a bad trade, you froze up and you couldn't get out of it, and you could have taken a loss or you could have broke even, and you just looked at it and stared at it and watched it get worse and worse. And I'm hoping that's why our phones aren't ringing off the hook with Apple, commentary from the retail clients that we have here today. But I hope they didn't just lock up, because, like I said, they've all been buying calls. They've all been riding it the right way. The trend is your friend. They've been doing that, capitalizing on it, making money. But it was eerily quiet today as far as the Apple, Priceline, Google calls. I mean, they've all pretty much played the same trade and same strategy for those three stocks. So I'm hoping as Kavanaugh would say, they had their protective stops in and or had some bought some downside protection, use these derivatives as they were intended to as a hedge for risk, because today and the last couple of days were pretty big. I think one things we saw that may have been a foreshadow for Apple was I think it was last Wednesday when the S&P was up and Apple was actually down. It was like the first time a lot of websites picked up on it. It was like the first time that Apple had been down when the S&P was up in over like 15 months. And so maybe a lot of technical people saw that too as well. And what Andrew said too, like a margin call somewhere else gets them out of their good trades. They need to raise capital quickly, and this will definitely be one that has appreciated in the last 6 months.
Yeah, while we're talking, I'm just looking at the open interest on this upside call wing here in April, and it extends out to the 9-10 strike and even a little bit beyond. It's amazing how how irrational the exuberance became out there in out of the money call land in Apple here. Hopefully you're right. Hopefully the OX customers were just plotting their readjustments, and that's why they weren't calling. Maybe they were so level-headed they were able to execute themselves, and they didn't need to call up and have the reassurance of your voice today, Mr. Grigas.
Yeah, I do hope that's the case, because you don't want to see people blow out, because it does seem like they were taking the winnings and rolling them right back into the at the money Apple calls.
Yeah.
We'll see.
Yeah, we'll see. We'll talk about some of the paper flow here in a minute. Anything else you guys were watching aside from, of course, the elephant in the room today from in the market today?
I don't know. We do get phone calls a lot on the 10-year note and the 30-year bond. Those have really rebounded, and I know the 10-year note this morning was below 2% again. It was probably the quickest rebound I've seen in that market in a long time. It finally looked like it broke downside support and was, we were headed into a period of higher interest rates, and then as fast as it could possibly snap back, it did. I'm hearing that a lot of foreign debt is also rushing into U.S. debt. So I think, the ECB in the Eurozone debt problems are probably beginning to resurface, or at least CNBC is picking up on them.
Yeah, the TLT was up on the day again today. That's my like little. I'm actually looking at the TLT more than I am the VIX almost, because of that huge turnaround.
It's amazing.
Everybody blink. What happened? Technically, really, from 2-3 weeks ago, nothing has changed.
Yeah.
But the TLT from 110, that thing was on a one-way road to Palookaville, and all of a sudden they have to have it today. So, trading 22 realized vol, I actually want to be backspread the TLT. I know it sounds crazy, but that's the position I want.
There we go. Back to the bonds that we called that screaming sale back last summer. And that particular prognostication hasn't exactly played out very well in our favor. That's more of a long-term pick, I think, at this point.
Right, very long term.
That moves over.
It has to happen eventually.
Exactly.
It just ain't happening this week.
That moves over into the long-term column of the old prognostication table.
That side of the ledger, your P&L open positions. Oh, that's the minus one. So that's a really long-term position. We'll close that next year sometime.
Exactly.
Or roll it forward. Just roll it.
Yes.
Exactly. All right. And that's going to do it for the old trading block. And now we're going to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
I just love that funk in that theme. That little pickup at the end there really just gets me going for the old Odd Block. Welcome to the Odd Block. This is, of course, a portion of the show where we parse some of the more interesting and or unusual options activity that's lighting up the tape today. And since we talked so much about Apple in the trading block, it seemed appropriate to dive into some of an overview, at least, of some of the activity we saw going up in Apple today. Of course, Apple's such a liquid name that it's impossible to actually sit there and parse trade for trade, because you'll be doing it all week just for one day's worth of trades. But we can do a quick overview to kind of take a look at what was going on out in Apple land today. And of course, this is the name closed, as we said, at about 580 even on the day, down about 25 handles today. So, and trading a little bit higher in the after hours, about $1 higher, but pretty much one of the darkest days we've seen in Apple land in quite a while. This is the name that's doing about 800,000 contracts a day these days. So serious liquidity going on in Apple these days. And they did nearly 1.3 million today. So just a size day here in Apple. Call put ratio out there in Apple about 1.3 to 1. So actually it's probably a little heavier than you might think, actually, given today's developments. What we saw from a net delta perspective is actually surprisingly flat. You think this would be a very net short day from an Apple perspective, people scrambling to pick up some downside, hitting bids on calls, that sort of thing. Yet we didn't see that. We saw not only were the net deltas on the day mildly short, but not not extremely high, but also the percentages of calls that were being sold on the bid and the percentage of puts that were being bought on the offer were all relatively equal across the board, about a third for each. So it wasn't a massive scramble in either side or on either side of the fence, really, to chase this name moving down. We saw some interesting developments out there today. This is a day where usually Apple hovers around an average open interest of about 2.5 million contracts. Today, we saw it get up to about 3.4, so a lot of new opening paper coming up in Apple today, including, not surprisingly, the April 600s were the strike du jour today with about 53,000 contracts going up on the day today. And a lot of it's fun to peruse the Apple option chain because you see a lot of intriguing paper going up across the board. I know this is the reason why so many market makers are flocking back into Apple these days, because there literally is activity up and down the chain. You pull up the chain today, someone closed out an 8 lot of April 165s today.
Wow. So
it's just including someone scrambled to cover and gobble up 60 of the April 300 puts for a penny. Even though you can easily buy the 400 puts for about the same price.
So why would they do that?
Someone needed to cover, or someone needed units in a hurry. All these little things you see going up on the chain that make you just kind of scratch your head. You talked about the upside before, John. Someone traded about 300 some out of the 815s today. A bulk of those were sales, thankfully, but they did trade 3 cents somewhere around there for a 50 lot or so. So someone paid 3 cents somewhere for the 815s. So yeah, and there's even a 9 lot of the 960s went up today, an opening buy for a penny. So someone bought the 960s for a penny. A lot of just bizarre nonsense going on out there in the front month in Apple. And of course, we saw vol, as you might expect, gapping up on the front month, up about 20% today from about an average of about 32 to about 39 or so in the front month range there. So that's just a quick little overview here, quick hits of what we saw going on in Apple, including a few surprising. Now, Andrew, you can admit it, that 9 lot of 960s, that has you written all over it.
It was. I was backspreading the 960s. I was doing stuff up there.
You were doing some serious stuff going
creating a tempest in a teacup
in the 960s. But the actual odd block name that we're going to talk about today is a suitable one for this portion of the show, the kind of names we like to bring up here. The little ones, the non-Apples, the ones that draw some interesting attention to them. And today's subject is Arvin Meritor INC, ticker symbol MTOR. They closed today at about $7, $6.95, essentially unched on the day. If you're not familiar with this name, they are a manufacturer of trucks, trailers, and specialty vehicles. So they're right in Mr. Grigas' wheelhouse. All those RVs and things that he loves to buy are all manufactured here by Arvin Meritor.
Oh yeah,
you're nothing but you spend the summers in don't you do from take the motor home and go from trailer park to trailer park across America, just seeing the sights and living free as they were.
I kill working women and stuff them in the back, and then get to the West Coast and I dump them in the ocean. And I did once a summer. It's nice family time.
Once again, we say thank God the wives are not listening to this program. John taking it to a darker place than I intended. I like it. Good job. Sebastian's not here. Someone has to pick up the slack.
It jacks up the listeners.
Yes.
Get them jacked up.
Yes. As we flirt with the boundaries of that clean tag on iTunes there. But yeah, this is a name, like I said, that makes a lot of trucks, trailers, and specialty equipment for that type of vehicle, and they have about 18,000 contracts open in this name, so not an extremely active name. They do about 1,500 contracts a day. They did about 1,000 or 1,100 today, but the bulk of those 18,000 plus contracts that are open are calls. There's been a lot of interest in upside call positions here in good old Arvin Meritor, including the current call put open interest ratio is about a little over 2 right now, given what we're seeing outstanding. And today we saw people following suit here with someone coming in buying about 1,000 of the May 8, so these are out of the money calls, yet again picking up about 1,000 for 20 cents. This seems to be adding to a position that this seems to be adding to a trend that we've seen developing for some time now. We actually saw, this trend actually dates back to March, and specifically March 21st, when MTOR jumped about 13% to about 8.5% after they reaffirmed their earnings outlook. And a lot of people thought that was the beginning of rosy days ahead, apparently, for this name, because they started gobbling up calls everywhere they could. There's currently about 2,700 open May 9 calls on the tape. April 8 and 9 calls both have about 1,500 open interest as well. So a lot of people were gobbling up upside here back in March when this name looked like it was looking pretty good. Of course, obviously the stock is trading substantially lower. It's given back all of those gains since then and then some. So we actually had a lot of open interest in the tape in March that went out worthless. People then rolling into April and May, hoping that the trend will turn in their favor here. But needless to say, a lot of people have lost a lot of money scooping up upside in MTOR over the past few months, and it appears that today's activity on these May 8s is following suit, with adding to another 1,000 to the 700 or so we're seeing open on this May 8 strike already. So the optimists are still out there for MTOR, positioning that this thing's going to gap up. Of course, we have earnings in this name coming out on May 2nd, so this is an earnings play as well on these May options. But needless to say that people have been betting or been gobbling up lottery tickets here on the upside in MTOR for a while. It hasn't exactly turned out too well, and we're seeing a return of that behavior. I'm sure you guys don't really pay much attention to Arvin Meritor on a regular basis. And Andrew, I swear to God, if you tell me this name was in your pit back on the SIBO, I might have to drop you from the call.
Well, that's the problem once you traded all kinds of these stocks. Actually, this stock, no, not Arvin Meritor. I used to trade another one, Magna. Magna was the Canadian auto parts maker.
If there's any obscure name that we talked about on the odd block, chances are about 80-20 that Andrew had it in his pit at one time or another.
I love the obscure names. I think those are still the most fun. This actually is an interesting trade from, I'm going to say, from a fundamental point of view. Like, it's a pretty cheap stock. I'm trying to just looking at the earnings. I mean, it looks like they have a buck of trailing earnings in this thing. And it's like a $6 stock. I'm trying to figure out what the problem is with it. Now, I can see why all these guys are buying calls. They'd probably do better buying call spreads, though, and stop wasting their money buying stuff that's $3 out of the money.
Well, that's pretty much par for the course across all these names that we've seen, I think.
Like this dude, buy the 6-8 call spread with the vol this high. I think that way they could probably make some money. They won't keep getting. They could have made that same trade back and forth and probably quadrupled their money if they just kept rolling the call spreads instead of buying the out of the money calls and just getting taken in the hoop. But yeah, hey, that's just me.
Someone's got. Well, it looks like there's about 1,500 open on the Ape 8 and 9 strike. So let's hope someone was working a vertical out there and was a little more savvy than perhaps the rest of these guys. I don't have the numbers on that to confirm that or not, but I can at least hope that one guy was a wee bit more savvy than the rest of the lemmings who are piling in. But yeah, apparently someone is a diehard bull in MTOR and has some money to burn.
6-8 call spread. I think 115 for 95 cents. You know, I think you've got a fair shot at least breaking even on that, and possibly doubling your money. But if you just buy the May 8s, you're cruising for a bruising. I don't see how you're going to make much money on a 70 vol with that, but maybe I'm terribly mistaken.
Spoken like an old school fundamentalist, sir. What's the fun in that?
I know. They should just go buy that stuff. Go buy the juice.
Go buy the juice. Exactly. This is, of course, south of the $10 level, where it's usually the demarcation line where people options volume tends to dry up and people start just trading the underlying because it is essentially almost an option at that point. And you're seeing some people do. Obviously, that has happened here in MTOR as well, because open interest is not exactly huge, nor is the average daily volume. But someone, nonetheless, is bullish here on MTOR. So we'll file this in the wait and see category of ones to watch for future episodes of the option block. And now that's going to do it for the old odd block today. And now we're going to dive right into the Express block.
The Express block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express Block. This is, of course, the portion of the show where the boys at OX tend to hold court and I relax with a nice, tasty beverage. And since Mr. Tim Navabi is still off traveling the world and sampling tasty baguettes, Mr. Grigas will have to hold court in his stead. So, Mr. G, aside from the OX clientele apparently not heading for the exits in Apple, what else was catching your eye and caught your interest in today's customer activity?
Well, we started the day off with earnings, and Citi was one of the notable ones that was making the tape. We also had Schwab out there, the company that we work for here at Options Express. What
is this Schwab you speak of? I'm not familiar with it.
Yeah, supposedly the best brokerage firm in the entire world, and they are lucky enough to buy the second best firm to work for, which is Options Express. But anyway, 15 cents was what they were expecting. That's what the analysts were expecting. That's what it came in line. Profit was a little bit lower. You can see our stock pretty much went up, went down, and then kind of finished in the area for the day. So not much movement. That stock doesn't move very much to begin with. And as I said before, it looks like more of an interest rate stock than anything else. So hopefully when these interest rates do go up, our long-term trade here on the option block, so will the Schwab stock, as a lot of the income and profit is earned off of the interest rate on the cash that they are sitting on. So started that day off, and I guess in line is better than didn't meet expectations. So it's good to see that the company is doing well. Other than that, I know we had talked about Priceline, Google, and Apple. It was neat to see a couple other stocks that really weren't tech driven, but Starbucks and CMG, same type of chart as Apple and Google and the third one there. But it looks like, that any good company that has had a good run here over the last year pretty much took some profit today. So I think it's a widespread profit taking against any stocks that have done well. So we saw a lot of people in Starbucks, a little bit of Amazon, and Chipotle as well.
Chipotle, the other Apple, as I like to call it. It took a junior
I don't understand
beating.
What the draw is of Chipotle, but I guess. I mean, whatever.
Back in the day when they first IPO'd around the 50 handle, they hadn't expanded into every single city block like they have today. They had great margins from a restaurant perspective. They had a pretty good name behind them. People were flocking to them. They were kind of the hip, new, up-and-coming Mexican chain in the country. They were doing a lot of the all-natural stuff and marketing themselves that way. And they had a lot of room to expand. There was no Qdoba. There were no other things that are kind of pressing on them now. So it was much more the ride from 50 to 400 or so made a lot more sense than perhaps the ride from 400 north does. But it's still an interesting one to watch. And you're right, for all the love that Apple has received over the past couple of years, CMG has had a very similar trajectory, and yet it's the stealth Apple. None of the love heaped upon it yet, except for those who are devotees of their foil wrapped burgers.
Yeah, I mean, we probably have. I'd say in the top 5 as far as people what they're trading at Options Express. CMG is probably right there, but it is not on the tape as far as CNBC and any of the other blogs or internet sites. I mean, it just is under the radar, and it's quietly kind of like Starbucks too. God, I remember in 2008 when Starbucks was below $10, and it's a $60 stock right now. It's just quietly progresses higher and higher each day. But both of those sold off. I think when they see stuff like Apple and Priceline, people taking profits, it's just kind of domino effects and spreads through the other decent stocks that have performed well lately. Other than that, there was some of the floor traders, old floor traders, I should say, were talking about a small article about the Eurodollar floor traders. They had a minor protest where they walked out of the pits to protest a large block trade that went up, I believe, late last week. And wanted to kind of pull Mark and Mike and Andrew and say, hey, is this the beginning of the end for them when block trades start coming through your pit? Because I'm sure Each and every one of you had to deal with that at some point.
That was the beginning of an end from the equity option side, that's for sure. What
is the sentiment? I mean, now these exchanges are for profit. Order flow is probably king. And crossing paper on in the floor in front of the pits is probably going to become more important than unfortunately the floor traders' profession or income.
Once exchange went multiple listings, once that started, the order flow trumped everything else, and it has for quite a while. And it used to be in the old days, as we like to talk about, the bid offer spread was sacrosanct across the gamut of products, and they couldn't cross on that bid offer spread. They had to actually improve it to actually cross it, which makes sense. They wanted to get the customer a better price. Then that went away. They started crossing things on your bid and offer, and once that started happening, really, and all the size paper started coming in to your pit already packaged and ready to go, as the boys at SCG like to do, then you know that all the good stuff's already going up before you're even seeing it in the floor, or if you're in the trading crowd or upstairs in the trading bin, whatever the case may be. So yeah, definitely, if you're one of these old dinosaurs still clinging to the floor way of life, unless you're in one of these protected crowds like SPX, and even that's starting to go away, then your days are definitely numbered. And if you haven't seen the writing on the wall in the Eurodollar pit, I can't imagine a walkout now in this day and age is going to impact anything.
Yeah, I thought maybe they'd just walk out and maybe go over to the grain options or something, because for whatever it is, the reason the grain options continue to hold on to a lot of the volume that goes up on those screens. So,
I think your buddy Mike hit the nail on the head last week when he said, it was the end of an era because lean hogs were finally going on the screen, and you can't think of any more diehard degenerate floor product than lean hogs. And once those go upstairs, then what hope is there for anyone else at this point?
Yeah, we turned those on this morning. I got the information out to the brokers, and I said the same thing. I thought that would be the last of the last to kind of make its way up to the screens. But you always forget about the ICE exchange and how slow they are to do anything, and that's why you still have soft options that trade on the floor. But let's see, other than those two things, we also had, we get this call every once in a while, so I thought I'd revisit it real quick. Some of our larger traders use portfolio margin at Options Express, and I had a client question regarding, a portfolio margin calculator. We do have one on the website. If you have a portfolio margin enabled account, it is in the balances page under detail. The problem that he expressed, and it was a valid one, was that he cannot do scenarios with it because the trade calculator automatically pulls in all the positions he has. So if he kind of wanted to do a what-if scenario, almost like a back testing, there would be a problem with that, or he would have to minus out all his positions. And if you've ever seen people that utilize portfolio margin, 80, 100, 120 positions is usually about normal, anywhere up to like 300. Sometimes I wonder how they can manage it. But that also brings up a few other questions. People are like, well, what do I need to have a portfolio margin account? Here's where the SEC has provided their great guidance in helping us determine who is eligible to trade in a portfolio margin account. And I think the biggest indicator is you need $100,000 in equity to be approved for portfolio margin. You need 3 years of confirmed trading experience, and I don't believe virtual trading counts. And you also need 3 months of recent documented trading history to be reviewed prior to approval. One thing that people usually say when they first trade in portfolio margin, this is great. Vol is between 15 and 20 right now. It's quiet. We have some stuff going on in Europe and the Middle East, but man, when you have a portfolio margin account and it's 2007 and 2008, and all we're holding, and I think I have an example in front of me. In this scenario, if you're doing like covered call with very neutral and not very aggressive strategy, 1,000 shares of IBM and short 10 at the money calls, you're talking a standard margin of 55,000 in a Reg T account, and your portfolio margin they're holding 14,000. Okay, really what they look for is an up-down move as far as your whole portfolio. If our house aggressive is 18%, so if we were to move down, say in certain equities by 18%, or certain broad indexes, say about 12%, that's what they're holding for your max loss. So if the SPX moved down 12%, maybe your account is down $28,000. That's what they're going to hold as margin, which sounds great when you're a premium seller, which can quickly turn into a nightmare when there's a debt crisis in Europe or something happens over the weekend. But if you are interested, definitely give our trade desk a call or shoot us an email. We can actually turn on portfolio margin on your account to see what the margin excess would be real time to kind of let you look at it and see if there's something you might be interested in.
That's a cool feature.
Really
I didn't know you could just turn it on and take a look at it at a glance. That's a nice thing for the customers there.
Yeah, it's nice for the salesman when he wants to. Oh, hey, you don't have to buy this. Let's just take a look at it. Let's see what it looks like. Oh, you could have 200 SPX puts on right now instead of the 20 lot you got on. So, it's nice talking to people when they realize it. It almost scares them. They're like, "Oh, no way! Turn that back off. I don't want that. I don't even want to know that it exists." But if you manage risk, you can do it successfully.
Well, thank you for that, Mr. Grigas. And indeed, yes, it is tax time too. So if you're the OX customers out there, make sure to get all those 1099s and Schedule D sorted out. Of course, that gains keeper on the OX website is quite a helpful thing in that sense, to have it populate all those forms for you. That's definitely worth whatever, $25, something like that, whatever it is on that. I think definitely take a look at that one if you're doing it yourself, because
it does compile the Schedule D. It is pretty nice. I've used it in the past. It's pretty user friendly. So if you do have any problems with it, you can still contact us. It's a third party, but we do have some experts in that program, so they'll be able to help you out too.
All right, thank you, Mr. G. And now we're going to close out the old Express block and dive right into the good old listener mailbag.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
And welcome to the listener mail block. This is, of course, where you, the listener, gets to write in, and we have a very, very timely question coming in today from Jack Tronte over in your neck of the woods there, Andrew, in Worcester, Mass. And he writes in with a variation on a question that we've seen come into Options Insider a lot over the past year or so, and it ties in very nicely to what you were talking about on the show last week with the mini Apple options. And Jack writes in, approximately how much capital do you recommend in your trading account to trade Apple options effectively? You can obviously trade one lots with a small account. That isn't really worth anyone's time. But if I want to trade 10 up, and he writes in parentheses, straddles, verticals, iron condor / flies, etc., and perhaps delta hedge my positions, how much of a commitment am I really looking at? So John, Mike, Andrew, let's one of you guys dive in here for. Who wants to take the ball and run with it here?
Well, I'll tell you what I traded with. I traded with my whole account, so that's probably not the proper way to do it.
So $8 million is what you're saying?
Yeah, I would go all in. He's right, though. I mean, you can't really trade one lots with how expensive they are, and and if you want to even get a decent delta, you're not going to be, buying these far-flung out-of-the-money calls and puts that have done so well in the call side over the last year and a half. But I was thinking a minimum of 10,000. What do you think, Andrew?
I would say, really, if you want to trade Apple and do the kind of stuff he's talking about, I would say 100,000.
Yeah, I was thinking six figures as well. I think 10,000.
It's not even worth it. I mean, there's other, and if you can't make money trading one lots in Apple, like vertical spreads and butterflies and iron condors and just stuff like that, if you can't make money trading a one lot iron fly, like, one call spread, one put spread, or, trading the paper, why would you want to spend more money? Why would you want to plunk down 20 grand and try to figure it out? I think that's the wrong. I don't know. To me, Apple is really, it's like the $100 blackjack table, and I think most people should learn on the $5 blackjack table. That's my opinion.
That's probably a good analogy, which is probably why those minis would be nice. People can at least bite off a more manageable chunk. I mean, I'm looking here right now at the ATM front month straddles trading for about $22. So if you're coming in to do anything, he's talking about straddles here. Any straddle starting off a couple of grand for one lot, So if he's talking for 10 grand, you can do a little bit of damage. But if he wants to effectively set up these positions he's talking about that are multi-contract, multi-leg positions, and if he wants to delta hedge on top, that's more margin you have to have.
And trade the gamma. I mean, how's he going to afford the margin on Apple?
Exactly.
I mean, forget it. It ain't going to happen.
The underlying alone to hedge with anything, even a one lot, is going to be substantial amounts of money to sling
He's
that
very
around.
Expensive, man.
Exactly. So I think, a minimum of 100 grand to really do any significant damage. Mr. Federal Holiday, what say you, sir?
I think he had to step out. But I mean, look at even his clients, right? 100 shares of Apple. I mean, you're in there 58 grand already. and in trading one lot, so that's just trying to buy a one lot in there with the collar.
I mean, you have any short legs on any of these spreads, and you get hit on any of these, where you have to actually get assigned on anything. Anything more than a one lot is going to be a substantial amount of margin you have to put aside to trade this stuff. So any brokerage firm is going to margin you up to the hilt to touch this thing. So yeah, I $10,000 I think is the bare minimum of entry, and really should be much north of that to trade it effectively the way he wants to anyway, with delta hedging and everything else. So
yeah, other than that, I think he'll slowly just run out of money.
Exactly.
Unless he's very, very good, And if he's asking that question, I don't know how much experience he has. So I'd say no. I'd say 100 G's for him, portfolio margin account, and then think about it if he wants to do it.
But if he just wanted to do vertical call spreads, or what do you think you would need?
Oh, just vertical. You just say, okay, I want to get long Apple, and you're super disciplined. Let's say.
Because I'm not sure. His question, I'm not even sure if he's just throwing out words or terms, or if he's
right. If your $20 verticals are still around, the thing too is it's allocation. To me, you should not allocate any more than 5% of your capital on one trade, ever. So if he's looking to trade that, even buying a 5-lot spread, when you have 20 handles, it's still $4. $4 on a 20 lot, that's $8,000. If he has 100 grand, I mean, he's got to put it into the perspective of what he's trying to accomplish, because he's just not going to be right on everything. And I think, that's just trying to be realistic on what his goals are. I mean, you could probably trade one lots with a $25,000 account in Apple, maybe, because I don't trade it very much unless it would have to be in a pretty big fully margin account.
Except for gobbling up tons of stock like you did today,
well, that's
sir.
Different. You buy stock and then you buy stock.
You degenerate underlying buyer, you.
That's like a IRA, buying app. That's a different gig than, let's say, your day job.
I always like to give you a hard time for buying underlying here.
I know.
You're dead to me, sir. You're dead to me. All right. Thank you for that question.
Only in a retirement account where I don't have to pay the taxes on.
There we go. Well, thank you for that question, Jack. And Andrew, if you see him walking around the beach there, Worcester's a bit of the ways from the beach. Maybe he'll come by your neck of the woods, and you could.
I think they got a lake.
You could talk in person.
Lake Worcester or something. They got some lake.
There we go. So maybe you'll see him on lakefront as you swing home from your sabbatical at the beach there. But that is going to do it for the old listener mailbag, and now we're going to dive right into Around the Block.
Around the Block.
All right, and those car horns mean it's time for Around the Block, the portion of the show where we discuss what's coming up, what we're watching on our collective trading screens. And Andrew, I know the Lobster is calling for you, sir. So what are you watching for the next few sessions?
I'm very interested in how the market shakes out the Spanish thing. I think some implied volatility comes in if Spain goes away. I'm just not convinced yet, and still I see some confirmation from the TLT, those types of things. So I'm. And also, there's always that Apple run-up to earnings. Now, that's coming next week. So everybody hates it today, but we'll see what happens tomorrow. They can just turn and love it all, Everybody that had to sell has already sold, and we'll see what happens.
You mean the massive sell-off going into earnings this
Well, at least, it's down 10%. That's a pretty good chunk of change, $60. But it means nothing if somebody wants to get out of a bunch more stock.
It's back where it was trading a few weeks ago, so...
Yeah.
Put it all in perspective. And I know you have to run, so why don't you do your plug of the day, sir? What's coming up in the land of the pit?
Our plug of the day is we are doing Option Pit is doing a free weekly after tax day each month, April, May, and June on the weeklies. So how they work, how to trade them, using some Greeks, pitfalls and profits and things like that. So keep yourself from stepping on your own fingers. Mark, Sebastian, and I will be co-hosting those, and then we have, of course, the big option event in June, the Option Pit event in June. So, and we look forward to people coming to Chicago. We're going to be hosting. We're going to do live trading, all kinds of stuff, and hopefully that will make everybody a much better trader.
And next up on the old Around the Block, we have one Mr. Grigas. What are you watching for the next few sessions? You mentioned a bit of it earlier in the Express block. I'd imagine Chipotle still catching your eye, and a few of the other ones going into earnings. Of course, they have earnings coming up on the 19th. The 19th is a very active day. In fact, it is an active earnings week this week. Of course, we have CMG, we have Bank of America, your favorite. You still long tons of BAC as well?
I'm still long. It actually literally went up to my entry point and sat there for about a week, and
just to mock
looked at
you.
it.
I hope you just wrote some calls and said,
I
get
think
the
I'm
hell out
long
of here.
at like 968 or 970, so that's about it. It gave me a chance, and I didn't take it.
That was literally just to mock you. I think Buffett drove it all the way up there just to mock you, sir. And now he's like, okay, you had your chance. You can no longer complain anymore.
Yeah, but just huge earnings this week. I mean, I'm looking at the calendar online right now, and there's a lot of Abbott Labs and banks and, like you said, CMG on the 19th. So, I mean, we get a lot of chatter early on in the morning when these companies report. Other than that, we had retail sales today, and there's the Philly Fed at the end of the week, rounding out the economic calendar, but mainly just focusing on earnings.
Yeah, maybe if you're one of these people who's complaining about the prices in Apple, perhaps you can. CMG is not much cheaper, but you can get in for a wee bit less on some of the. I'm looking at some of the vol here is a little bit less, and some of the premiums are a wee bit less. You can do a little bit more damage with a little bit less money out here in the land of CMG. Of course, if this trajectory continues, then that won't be the case for long. And particularly if Apple comes down and CMG comes up, we'll see. If the demand for burritos can never be truly satiated, I think. But yeah, an interesting week from an earnings perspective. AMD, Intel, my old stomping grounds. Nokia, kind of make or break time for Nokia. They're hovering around $4, so they're, from an options perspective, they're kind of moot at this point. Still doing some size volume today, 90,000 contracts. With typical days about 28,000. Perhaps they're becoming the new paper arbitrage name du jour now that Citi is out of that game. But still a lot of about 10,000 at the money 4s going up, calls and puts across the board in Nokia today. And this is 3 days before earnings. Earnings aren't until the 19th. 14,000 May 4 puts going up today. A lot of paper going up in Nokia today. Very interesting from a name that is a $4 name. You don't usually see that much love, particularly for Nokia, which is essentially on life support at this point. They have to do or die with this Lumia 900. This is pretty much their big shot. They
don't have any patents in the wind that they can't sell off?
Well, they got Microsoft pumping them money, so that'll keep them afloat for a while. But aside from that, if this whole Windows Phone venture blows up in their face, they don't have much else to go back on. That's kind of it's kind of a do or die venture in the phone arena for them. And so a lot of big names. Oh, of course, Microsoft coming up next week, I believe. We always talk about Microsoft being on the 19th as well for Microsoft. Let's see, they closed today at 31 even. Let's see what the world is pricing their straddle. Oh, a whopping 90 cents, about $1. That actually is pretty juicy for Microsoft, given we talked about them all the time being one of the best quarter after quarter earnings sales there is. Last quarter they actually moved a bit, so that was one of the few times you actually got bit being a degenerate premium seller out in Microsoft. But usually their earnings are a resounding meh, and you can take that to the bank. Of course, the Widowmaker also coming out relatively soon. Widowmaker coming out. They're the 23rd, so they're next week. But still, a lot of heavy. We're in the thick of it, so this is a fun time to be an options trader. All right, so that is going to do it for this episode of the Option Block. I, of course, want to thank all of my cohorts for joining me on the show today, starting off with you, Mr. Andrew. What is coming up in the land of the pit? Give us your plug of the day, sir. Okay, thank you for that. Andrew and Mr. Grigas, what is coming up in the land of OX? Any intriguing in-person seminars or educational events or just pinup calendars you want to let us know about from the land of OX?
Well, we had a good turnout at the Chicago Live event over at the McDonald's campus in Oak Brook. I had about 120 traders and clients come out for the free show. I talked to Jim. He said it was a big success. We had one of the managers from the trade desk out there answering questions as well. The next one, like I said last week, but Jim wanted me to give it a push again, it is going to be in beautiful Cleveland. I've been told it's a lot better there now. Saturday, April 21st. Beginning at 8 a.m., ending at 3:30 p.m. at the Crowne Plaza, Cleveland South. So you can go online and sign up for that, or just give us a call and we can get you hooked up.
100 plus people at the McDonald's.
100
plus people at the McDonald's campus one. That's a pretty good turnout.
Yeah, no, it was. And I talked to Nelson, who's a manager on the trade desk, who was out there, and I asked what he said was awesome. I said, really? How can any type of seminar be awesome? But I guess when you're around people that love to trade and love to talk about the markets, it's pretty exciting. So yeah, it was a good turnout. So we hope we had the same type of results in Cleveland on the 21st. Other than that, the last day to vote for the wish list is today. So if you're an Option Express customer and you're hearing this tomorrow, it's probably too late.
Yeah, you missed your chance. But I like to think we had a little bit to do with that good turnout, plugging that McDonald's event as we did. So hopefully our reach extends to Cleveland as well. See how many Cleveland listeners we have that we could send your way for that event. But yeah, thank you for that, John. And listeners, by all means, if you do want to vote, get in there. Get in there today. Tomorrow is. We should probably extend that deadline so the listeners
are we
can
streaming
get in
this anywhere? Is this?
Yeah,
there'll be a new round and new wish list items up there at the end of this week. So there'll be something for you to vote on.
Put me in for the free gains keeper for the year. There we go. That's my
I like
wish
that one.
list. That's a good one. It's only $25, but it's just so silly to have to when you're scrambling to get all your Schedule Ds done. You're like, oh. Actually, it's a very inelastic product. People buy it once a year when they have no other choice. So I suppose their market is relatively firm.
Yeah, you're backed into a corner and you say, oh, well, it's only $25. It's like when you want to file electronically and you see this $1,000 refund. You're like, I don't care about $20.
Exactly. They know they got you. They might as well chip in the extra $25, $19.99, whatever it is, to get it all done for you. But of course, Mr. KYO, Mr. FHM had to head off for a pressing call, so I will do his plug for him. By all means, check out the boys over at KYO at knowyouroptionsinc.com. They have some upcoming webinars this week. You should check out their website. They have all the registration links for them there. You could find out a lot more about what the boys at KYO are doing in Apple these days, because that is the trade du jour that everyone wants to know about. And of course, you can always surf on over to theoptionsinsider.com to check out more information on all the topics we discussed today on the program and much more, including breaking news from the options market and unusual activity alerts and analysis from the options market, and our growing bevy of shows on the old Options Insider Radio Network. So by all means, surf on over to theoptionsinsider.com or type in Options Insider into iTunes or Stitcher or Zune or your podcast player of choice, and you can find all of our good programming up there for your listening entertainment. And that is going to do it for this show today. We, of course, want to thank all of you out there for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.